Greetings. Today's video is about the top 8 gold ETFs of 2023. And I think this is an important topic because a lot of people have been interested in investing in gold. I made a video last year about the top gold ETFs, which was very popular. And when it was released, it was a very good time to buy gold because the price of gold was very low when I released that video from last year, and then it went up very high. So although the gold price now is pretty high compared to what it was last year, I think for anyone interested in investing in gold ETFs is a good and liquid option. So you should still keep in good knowledge of the gold ETFs on the market, in case the price goes down again and you want to buy, or maybe you think it's a good opportunity to buy now and you want to buy. I'm not going to make your investment decisions for you. You have to do your own research, but it's important to know the landscape of the gold ETF investment scene. So without further ado, let's discuss investing in gold ETFs. I think investing in gold ETFs is an easy way to invest in gold, because it's highly liquid. Since you can trade it easily on the financial markets, you can buy and sell easily. It's really convenient for you. You don't have the burden of storing gold physically, which may be inconvenient for you, and you can simply just buy and sell on the open market. So it's a very easy and convenient way of investing in gold. So for the beginners out there who don't know what exactly a ETF is. A ETF stands for Exchange Traded Fund, and what it is basically a basket of securities. It's a fund that holds a basket of securities. So a ETF, for example, can hold a number of stocks in a particular industry to track the price of that industry, the index of that industry, or it can hold a commodity like gold to track the price of gold. In the case of gold ETFs, these funds would hold physical gold. So when you're investing in these funds, you're buying a share of the assets the fund holds, and in this case, it is gold. So you are basically investing directly into gold. And we won't look into ETFs that invest in mining stocks or gold futures contracts, because that's an indirect way to track the price of gold, and we want to be more direct with what we're investing in. If you're interested in something like gold, it's pretty straightforward. Just invest in a fund that simply holds gold, and you'll be buying a share of that fund, and that share represents a share of their ownership of the gold that they have. So we won't be looking at those mining stocks, mining ETFs. We won't be looking at those gold futures ETFs. It's not really a straightforward way of tracking the gold price. I think investing in funds that actually hold gold directly is the most straightforward and convenient way. So how do we evaluate ETFs? There are 3 main things we should look for. The first is the expense ratio. So what the expense ratio is the operating expenses of the fund over the average assets. What the expense ratio tells you is how costly the fund is. The lower the expense ratio, that means compared to the assets they hold, they have a lower expense for managing those assets. So you want funds with lower expense ratios because it means they're less costly in managing their assets and more efficient in managing their assets. So most of your money will be going directly to owning the assets they have rather than paying expense fees, management fees, etc. So you want low expense ratios because of that. Another thing you should look for is whether the fund is leveraged or non-leveraged. You should look for funds that are non-leveraged or not very much leveraged, or which I mean by that is less leverage, because that means there's less unnecessary risk, especially for something like gold, you don't really need unnecessary risks. You don't really need unnecessary financial engineering. So we won't look at leveraged gold ETFs because they are simply unnecessary for you. They provide risks that are unnecessary for tracking the price of gold. And the last thing we should look at is the size of the fund, which indicates the liquidity of the fund. The larger the fund is, the more trading volume, the more liquid it is, the more accurately it tracks the price of gold, and the more easy it is to buy and sell at the accurate price of gold. But because gold is so liquid, it's so traded so often, the size of the fund matters less. So we will be weighing the expense ratio much higher than the size of the ETF when we evaluate these gold ETFs. And of course, we won't look at the leverage ETFs or ETFs that use unnecessary financial risks. So without further ado, let's move on to the top 8 gold ETFs. So number 8 is the biggest gold ETF on the market. It's SPDR Gold Shares, and it has $59 billion about of assets under management, and it has an expense ratio of 0.4%. So this is the most popular fund. It's highly traded, but compared to the others on the list, it has a higher expense ratio. It's more costly. So some more of your money will be going to expenses, management fees, rather than owning the gold itself. So there are better options on the list, so make sure you stick into the end. Number 7, we have the iShares Gold Trust, which has $29 billion of assets under management. So it's also a pretty big ETF. And its expense ratio is 0.25%, which is much lower than SPDR Gold Shares. So already the cost is a big improvement from the last ETF. Number 6, we have Van Eck Merck Gold Trust. So this fund has $721.6 million of assets under management, and it has an expense ratio of 0.25%. So the same expense ratio as the last fund, but it's much smaller. So why did I rank it higher? The reason I ranked this fund higher is because it offers the option to take physical delivery of gold in exchange of your shares. So because it has that option in case you want to take delivery of physical gold in exchange for your shares, I think it is a better ETF because it gives you more options. That's why I ranked it higher. So moving on, we have at number 5, the Goldman Sachs Physical Gold ETF. And this fund has $660.68 million of assets under management and an expense ratio of 0.18%. So pretty straightforward, lower expense ratio, still a pretty big fund, and that's why it's a better fund than the previous ones. So moving on number 4, we have Granite Shares Gold Trust, and this fund has $978 million of assets under management and an expense ratio of 0.17%. And at number 3, we have the Aberdeen Physical Gold Shares ETF, and this is an even bigger ETF. So it has the same expense ratio as Granite Shares Gold Trust with 0.17%. But it has a significantly bigger assets under management, significantly larger volume of assets under management, which is why I ranked it higher. So it has $2.8 billion of assets under management. And at number 2, we have SPDR Gold Mini Shares Trust, which has $6.4 billion of assets under management, so even bigger fund. It's an even bigger fund, and it has 0.10% expense ratio, so less costly and bigger trading volume, so that's ideal. And last but not least, the number 1 gold ETF of 2023 is iShares Gold Trust Micro, which has $984 million of assets under management and a 0.09% expense ratio, the most low cost ETF, gold ETF on the market, which is why it's number one. So those are the top 8 gold ETFs of 2023. I hope this helps you evaluate the different gold ETFs on the market and make the right investment decision for you. Like I said before, last year when I released the top gold ETFs of 2022, the gold price was very low, so it was a very ideal time to invest in gold. Now it's a bit higher, so you might want to wait a little bit and do some research on the gold market, but in times like these, it's still very unstable economically and geopolitically, and a lot of people are moving their assets into gold, especially when currencies like the US dollar are being undermined by other countries switching their reserve currencies and lessening their reliance on the US dollar. A lot of people are looking to gold because gold is basically, or was basically, the money that backed the currencies of the world. And now the gold standard is off, but a lot of governments still treat gold as money because they still back their currencies with gold, especially now when a lot of countries are lessening their reliance on the US dollar. So the gold market is still a market you should look into and keep on researching. So thank you for watching. I hope you enjoyed this video. If you did, give it a thumbs up, like the video, share it to your friends, and make sure to subscribe for more enlightening content. Thank you again, and I'll see you guys in the next video.